Welcome back to the channel, everyone. This is BullionIQ, and I hope you're all having a great day. If you're an XRP holder, today's discussion is extremely important because what just happened is not hype or speculation, it's real progress. Ripple has secured a major regulatory win, and once you understand what this actually means, you'll see why this is so bullish for XRP in the long run. Stay with me till the end because this is much deeper than a simple license update, and it directly connects to real adoption and institutional money. If you enjoy talking about Ripple, XRP, and real-world crypto adoption, type X in the comment section and smash that like button. It really helps the channel and pushes this information to more XRP holders who need to understand what's happening right now. On BullionIQ, we focus on fundamentals, regulation, and real infrastructure, not short-term hype, because that's where long-term value is built. Now let's talk about the big news. Ripple has officially announced that it has secured preliminary approval for an electronic money institution license from Luxembourg's financial regulator, the CSSF. This might sound technical, but it's a massive step forward. This approval allows Ripple to expand and scale its payment services across the European Union while operating fully within a regulated framework. This is exactly what institutions require before they move serious money. Ripple itself described this as a pivotal step, and that wording matters. They are no longer testing or experimenting. They are scaling. Ripple has now achieved more than 75 licenses and registrations worldwide, processed over $95 billion in total volume, and already reaches about 90% of daily foreign exchange markets. These numbers show real usage, not theory. This is what separates Ripple from most crypto projects. What makes this even stronger is the timing. Just days before this announcement, Ripple also secured its UK Financial Conduct Authority electronic money institution license, along with crypto asset registration. So now we are seeing back-to-back regulatory approvals in both the UK and the European Union. This sends a very clear message that regulators are not pushing Ripple away, they are welcoming it. Cassie Craddock, Ripple's CEO for the UK and Managing Director for Europe, explained why this matters so much. She pointed out that Luxembourg has one of the most sophisticated and progressive regulatory environments in Europe. This approval allows Ripple to scale its digital asset infrastructure across the EU. She also made it clear that regulatory clarity is the key to institutional adoption, and Ripple is leading that process. This point is critical for XRP holders to understand. Banks, payment providers, and financial institutions do not move without clear rules. They need legal certainty before they integrate new technology. Ripple is building that certainty step by step, and this is why these licenses matter more than short-term price action. Regulation unlocks institutional capital, and institutional capital changes everything. Now this goes even deeper for XRP itself. Luxembourg's central bank has already openly discussed XRP integration, and this is documented. This isn't rumor or speculation. Just last month, we talked about how XRP is gaining exposure to over 5,000 banks across Europe. This is happening through real systems that are already in place. A recent proof of concept demonstrated real-time euro settlements using blockchain technology. It uses the Interledger protocol and the XRP ledger to connect regulated banking systems with digital asset liquidity. In simple terms, euros can move from traditional bank systems and settle on the XRPL in real time. Payment service providers can connect bank deposits to blockchain liquidity without changing SEPA or existing banking infrastructure. SEPA covers 36 jurisdictions, including 27 EU countries, plus the UK, Switzerland, Norway, and others. More than 3,500 financial institutions already participate in this system, with thousands enabled for instant payments. The key takeaway is that XRP can plug into this massive network smoothly and compliantly, which is exactly what institutions want. When you step back and look at everything together, it becomes clear this isn't just another crypto headline. This is real confirmation that adoption is accelerating right now. Europe is moving from pilot programs to full-scale, production-ready blockchain systems, and Ripple is positioned right in the center of that shift. XRP is right in the middle of it all. This is what real adoption looks like. Licenses, infrastructure, institutions, and real volume all lining up at the same time. For those paying attention, this is how transformational change begins, quietly at first and then very suddenly. In the next part, we'll break down why this regulatory momentum is so powerful for XRP's future, and why integration matters more than anything else. It becomes clear why this development is not just positive news, but potentially game-changing for XRP holders. The biggest mistake people make in crypto is focusing only on price candles and ignoring infrastructure. Price follows usage, and usage follows regulation. Ripple securing regulatory approval in Luxembourg right after the UK FCA license, shows a clear pattern. Ripple is positioning itself inside the most regulated, most trusted financial corridors in the world. This is exactly where institutional money operates, and institutions are the ones that move markets at scale. Banks and large financial institutions do not care about hype, Twitter trends, or short-term pumps. They care about compliance, legal clarity, and reliability. When Ripple gets approval from regulators like the CSSF in Luxembourg, it signals that Ripple's technology, operations, and controls meet strict financial standards. This gives banks confidence to actually integrate Ripple's payment solutions, not just test them. And when banks integrate Ripple's systems, XRP becomes part of real payment flows, not just a speculative asset sitting on exchanges. This is why regulatory clarity is so powerful. Once a framework is in place, institutions are no longer afraid of sudden rule changes or legal action. They can move from pilot programs into full commercial deployment. Ripple itself stated that Europe is moving from experimentation to production-ready blockchain infrastructure. That sentence alone tells you everything you need to know. Production-ready means real money, real customers, and real volume moving through the system every single day. Now let's talk about why Europe matters so much. Europe is one of the largest financial regions in the world, with massive cross-border payment demand. Different countries, different currencies, and constant money movement create inefficiencies in the traditional system. Ripple's technology is designed to solve exactly that problem. Faster settlement, lower costs, and instant liquidity are not just nice features, they are necessities in a modern financial system. Europe embracing this technology is a major signal to the rest of the world. Ripple's payment network already reaches about 90% of daily foreign exchange markets. That's not a future goal, that's current reality. They have already processed over $95 billion in volume. This shows that Ripple is not building something theoretical. The system works, it scales, and it handles real demand. The more regulated regions allow Ripple to operate freely, the more this volume can grow. Now let's connect this directly to XRP. XRP plays a critical role as a bridge asset. It provides liquidity between different currencies instantly without the need for pre-funded accounts. In traditional finance, banks have to park capital in different countries just to move money. That capital sits idle. XRP changes that. It allows value to move on demand. This is why institutions care about it, and this is why integration matters far more than short-term price movements. The proof of concept we mentioned earlier shows exactly how this works in practice. Euros move through existing banking systems, connect via the Interledger protocol, and settle on the XRP ledger. This happens in real time. Importantly, this does not require banks to rip out their existing infrastructure. They can plug XRP into what they already use. This reduces risk, cost, and resistance to adoption. That is a massive advantage. SEPA is a perfect example. It already connects thousands of institutions across dozens of jurisdictions. By linking SEPA to the XRPL, Ripple enables instant settlement and liquidity without changing the underlying system. This is how real adoption happens, quietly, efficiently, and at scale. Once systems like this are live, usage can grow very quickly because the rails are already in place. Another important point is trust. Ripple now has more than 75 licenses and registrations worldwide. That level of regulatory approval is extremely rare in the crypto industry. Most projects struggle to get approval in even one major jurisdiction. Ripple is doing it across multiple continents. This builds trust not only with regulators, but also with banks, payment providers, and governments. Trust leads to partnerships. Partnerships lead to integration. Integration leads to volume. And volume is what ultimately drives demand for XRP. This is the chain reaction many people miss when they only focus on charts. By the time price reacts, the groundwork has already been laid months or even years earlier. What we are witnessing now is Ripple moving into a phase where adoption accelerates naturally. Once institutions see that other institutions are using the system safely and compliantly, hesitation disappears. This is how network effects begin. Europe taking the lead here could influence other regions to follow, especially those watching how regulatory clarity and innovation can coexist. This is why this moment matters so much. It's not loud, it's not flashy, but it's foundational. Ripple is embedding itself into the global financial system piece by piece. XRP is positioned at the center of that system. This is where long-term XRP holders need to think differently from the average retail trader. Most people in crypto react to headlines emotionally, but institutions operate on structure, timelines, and infrastructure. What Ripple is building right now is not designed for overnight price spikes. It's designed for permanent integration into the global financial system. And once something becomes part of that system, it doesn't get removed easily. One of the most important effects of institutional adoption is what it does to liquidity demand. When banks and payment providers begin using XRP as a bridge asset for real transactions, XRP is no longer just sitting on exchanges waiting to be traded. It is actively used to move value. That creates consistent transactional demand. Even if the same XRP can be reused, higher volume and more corridors increase the need for reliable, deep liquidity. This is how utility slowly but steadily supports value. Another key factor is speed and efficiency. Traditional cross-border payments can take days to settle and involve multiple intermediaries. Each step adds cost, delay, and risk. Ripple's system, using XRP and the XRPL, reduces settlement time to seconds. For institutions moving large sums of money daily, saving time and cost is not optional. It's a competitive advantage. Once they experience this efficiency, going back to slower systems makes no sense. This is why regulatory approval changes everything. Before regulation, institutions may test technology in controlled environments. After regulation, they deploy it. The Luxembourg and UK approvals remove major barriers. They allow Ripple to operate openly, sign contracts, and onboard clients at scale. This is when real volume starts flowing through the system, not just proofs of concept. Another point many people overlook is how regulation reduces uncertainty risk. For large institutions, uncertainty is often a bigger concern than cost. A system that is fast but legally unclear is unusable. Ripple's regulatory progress removes that uncertainty. It tells institutions that they can rely on this infrastructure long-term without fear of sudden shutdowns or legal challenges. That confidence is priceless. Let's also talk about the broader macro picture. Global payments are evolving rapidly. Governments and central banks are exploring digital currencies, faster settlement systems, and tokenized assets. Ripple's technology fits directly into this transition. It doesn't compete with traditional finance, it upgrades it. This makes Ripple an ideal partner rather than a threat, and that positioning is very intentional. Europe's role here is especially important. Europe is setting a clear regulatory framework for digital assets, and other regions are watching closely. When Europe demonstrates that compliant blockchain systems can operate at scale, it encourages adoption elsewhere. Ripple being compliant in Europe gives it a first-mover advantage in a region that influences global financial standards. For XRP holders, this means patience is key. Markets often move before the public understands why, but sometimes the opposite happens. The foundation gets built quietly, while price stays relatively calm. Then, when usage reaches a certain threshold, the shift becomes obvious very quickly. This is how long-term trends usually play out. It's also important to understand that this is not about replacing all systems overnight. Adoption happens in layers. First comes regulatory approval, then limited integration, then broader rollout, then optimization and expansion. Ripple is clearly moving through these stages. The Luxembourg approval shows they are entering the expansion phase in Europe. Another factor to consider is competition. Many crypto projects talk about adoption, but very few are actually working with regulators and financial institutions at this level. Compliance is difficult and expensive. Ripple has spent years navigating this space. That creates a barrier to entry for others. The more embedded Ripple becomes, the harder it is for competitors to displace it. This is why many institutions prefer working with a single, trusted infrastructure partner rather than experimenting with dozens of unproven systems. Ripple's growing list of licenses and partnerships makes it an obvious choice. XRP benefits directly from that trust because it is a core part of the system's designs. When you connect all these points, the picture becomes very clear. Regulatory clarity leads to institutional confidence. Institutional confidence leads to integration. Integration leads to volume, and volume leads to sustained demand. This is not a short-term story. It's a structural shift. XRP is not being positioned as a speculative token. It is being positioned as a neutral bridge asset that can move value between different systems instantly. That role becomes more important as the world moves toward faster payments, digital currencies, and tokenized assets. As financial systems modernize, fragmentation actually increases. You have different currencies, different payment rails, different digital asset networks, and soon different central bank digital currencies. Moving value between all of these systems efficiently becomes a major challenge. This is exactly the problem XRP and the XRP ledger are designed to solve. They don't replace existing systems, they connect them. That is why regulators and institutions are willing to work with Ripple. The Luxembourg and UK approvals show that Ripple is being trusted to operate at the heart of regulated financial flows. That matters because once infrastructure sits at the center, usage tends to grow naturally. Payment providers integrate it, banks rely on it, and volume increases without the public even noticing. This is how financial plumbing works. It's invisible, but essential. Another important point is resilience. Systems used by global finance must work every day, under pressure, at scale. The XRP ledger has been operating for years with high uptime, fast settlement, and low costs. This track record matters far more to institutions than marketing or community hype. Reliability builds confidence, and confidence drives adoption. As more institutions use Ripple's payment solutions, XRP's role becomes harder to ignore. Even if institutions don't hold XRP long-term, they still need it for liquidity at the moment of transaction. Multiply that by thousands of institutions and millions of transactions, and the importance of deep liquid markets becomes obvious. This is where scale begins to matter. We also need to talk about timing. Financial infrastructure changes slowly, then suddenly. For years, Ripple has been laying groundwork, securing licenses, building relationships, and refining technology. Now we're seeing those efforts converge. Multiple approvals in key regions signal that the slow phase is ending and the acceleration phase is beginning. This is why moments like this often feel quiet in the market. The loud part usually comes later, after systems are already live and volume is flowing. By the time the public narrative shifts, institutions are already positioned. This is why understanding fundamentals early is so important. Another overlooked factor is how this impacts confidence across the entire ecosystem. Developers, partners, and service providers are more likely to build on infrastructure that is compliant and widely accepted. Regulatory clarity attracts builders, and builders create tools and services that increase utility. This creates a positive feedback loop. For XRP holders, this reinforces the idea that long-term value comes from usage, not speculation. Price can be volatile in the short term, but infrastructure-backed demand tends to be more stable. As XRP becomes embedded in payment flows, its relevance increases regardless of market cycles. It's also worth remembering that this is not just about Europe. Success in Europe strengthens Ripple's position globally. Other regions often look to Europe and the UK as benchmarks for regulatory frameworks. Ripple being compliant, there improves its chances elsewhere. This creates a domino effect. At its core, this is about trust. Regulators trust Ripple. Institutions trust the infrastructure. And as that trust grows, adoption follows. XRP sits at the center of that trust-based system as a tool for moving value efficiently. When you put all of this together, it becomes clear that what we're seeing now is the foundation for something much larger. It's not flashy, but it's powerful, and it's exactly how real financial change happens. It's important to focus on what truly matters for XRP holders moving forward. This moment is not about short-term excitement or quick price targets. It's about understanding where XRP is being positioned in the global financial system and why developments like these often define the future long before the market reacts. Ripple securing regulatory approval in Luxembourg right after its UK approval is a clear signal that the company is operating with alignment, not resistance, from regulators. That alone separates Ripple from most of the crypto industry. Regulation is not a threat to Ripple, it's an advantage. Every license earned increases trust, reduces uncertainty, and opens the door to real institutional usage. XRP benefits directly from this because it is a core part of Ripple's payment infrastructure. What makes this especially powerful is that adoption is happening at the infrastructure level. Banks, payment providers, and financial institutions are not speculating on XRP. They are preparing systems that can use it. This kind of adoption doesn't make noise on social media, but it creates lasting demand. Once systems are integrated, they don't get switched off easily. That's how long-term value is built. It's also important to remember that market cycles don't change fundamentals. Prices can move up or down in the short term due to emotion, macro events, or speculation. But infrastructure-backed assets tend to survive and grow across cycles. Ripple's growing role in regulated payments gives XRP that kind of foundation. This is why many long-term holders remain patient even during periods of low volatility. For XRP holders, the key takeaway is focus. Focus on regulation, integration, and usage, not daily price fluctuations. The real question is not, when will XRP pump, but how deeply is XRP being embedded into financial systems? Right now, the answer to that second question is becoming clearer with every new approval and partnership. We are watching a transition from pilots to production, from testing to scaling. Europe moving forward with compliant digital asset frameworks is a major step, and Ripple is positioned at the center of that transition. XRP is not on the sidelines, it is part of the solution being built. This is what real adoption looks like. It's slow at first, structured, and quiet. Then one day it becomes obvious. Many of the biggest shifts in finance happen this way. Those who understood early benefited the most, not because they predicted price, but because they understood direction. As always, let me know your thoughts in the comments section. Do you think Europe will lead global crypto regulation, or will other regions move faster? If you found value in this breakdown, make sure to like the video and share it with other XRP holders who want real insight, not hype.